Hi, this is Nick Katko from BMA. Welcome to today's webinar. I'm still getting things set up. All right, today's webinar is the second of a two-part webinar series on value stream management. And today we are going to talk about planning and managing the value stream. So before we get started, I want to do the technical check. And I want to make sure that you can see me, you can hear me, and you can see my screen. So if you could type your answer in the question panel, a few of you, just so that I can confirm that, then we'll move on. All righty, thank you very much. All right. So again, just the general stuff before the webinar that we always talk about. If you'd like a copy of the handout, it's in the handout section of your control panel and you can download it. There is also a value stream management assessment forms that are available for download. If by some chance you forget to download, you can email me. I'll be glad to send you both documents. And of course, if you're watching this on a recording, I'll be glad to send you the handouts after you watch this. If you are a certified public accountant in the United States and you would like to receive 1 hour of continuing education credit for this webinar, the rules are you have to answer the 3 attendance check questions. You have to attend the live event for at least 50 minutes. And again, after the webinar is over, please just send me an email and I will be able to get a certificate to you in a few days. Our agenda for today. And, value stream management is very much, how lean accounting and lean practices work together. And so we're going to focus on, in terms of planning the value stream, we're going to focus on the strategy deployment process. We're going to look at accounting's role in managing value streams. So, accounting does play a role in the overall management of the value streams, but it's not sort of what we think of when we think about traditional type management. So we'll be discussing these topics. We'll do a wrap up, excuse me. I will look at when we're doing the polling questions, I will look at the question panel in my control panel. And if you have a question, maybe I'll try to answer them during rather than waiting till the end. But if you have questions, please enter them in the question panel. All right, so let us get started. Value stream management is really sort of 4 independent plan, do, check, adjust cycles that really have some overlap. So in April, if you attended the webinar, we talked about controlling the value stream using daily lean management practices. And then we talked about improving the value stream and how to structure continuous improvement and also how to sort of run continuous improvement events in a disciplined fashion. Now, by the way, if you are attending this webinar and would like to also look at the April webinar, they're available on our website if you go to the webinar page. So today what we're going to do is we're going to talk about the managing and the planning piece. And, like I said, there's a lot of overlap. The daily lean management practices reveal problems and issues, which sort of feeds the improvement cycle. What we're going to learn today is the overall planning cycle really is about focusing the entire company on what improvements are prioritized for the year. And it's a lot different than it's a lot different than a wish list. It's really about what do we expect to accomplish in terms of improvements this year. Then the overall management, that's sort of like the people skills and all that stuff that go along with managing value streams. So strategy deployment, you may also know this as Hoshin, Hoshin-Kanri, or policy deployment. And it is a standard lean practice in lean companies. And it differs from traditional planning in a number of ways. First of all, the focus. Traditional planning, which all companies do, usually just focuses on the numbers. What numbers do we need to make next year? Strategy deployment sort of changes that, and it's focusing on the actions to drive the numbers we would like. So, traditional planning is, here are the numbers, you need to figure out how to reach them. Policy or strategy deployment is all about making sure that the entire organization has agreed on the actions that are necessary to drive the numbers. Traditional planning is top down. Leaders of the organization set the goals. They come down from on high of the mountain, and people have to figure out how to make it happen. Strategy deployment is very, very collaborative. There is communication and consensus. The whole idea is getting agreement throughout all of the managerial ranks of the organization. What do we need to work on? Goal setting or setting targets. Traditional planning, many goals. Strategy deployment is, what are the few goals with specific action plans or improvement plans that we expect to achieve? I've worked with companies on strategy deployment, and even some companies that are sort of use the process, they actually still have too many goals, okay? And it's sort of like a wish list. This is everything we would like to accomplish in the year. But, the fact of the matter is, and I think this is an important point of strategy deployment, is that lean companies recognize that they have a limited time for continuous improvement. So if you limit the goals, then you can actually complete those improvements rather than hoping all these improvements get done. And another difference between strategy deployment and traditional planning, traditional planning is just like an annual event. We do it once a year, usually in the fourth quarter of the year. Strategy deployment is based on a series of continuous PDCA cycles. So it's not that we just do it and hope for the best. We have subsequent PDA cycles which are going to sort of do the check and adjust. So that's sort of the differences. What we're trying to do, align improvements and prioritize improvements. I learned this in my first job as a chief financial officer when we began a lean transformation, after a few years of just sort of getting lean in place, we started this. We didn't call it strategy deployment or Hoshin, but what we did as a management team is we had priority strategic initiatives, and there were only a few of them that we felt were most important for the organization. So again, you know, the important point of strategy deployment, you know, you can follow the methodology. If you call it something a little bit different, that's fine, but sort of follow the principles. So this idea of continuous PDA cycles in terms of planning, you know, and there's really 5 of them that need to be developed. First, you have the overall 3 to 5 year strategy of the company done by the executive team, leadership team, owners. So this is like a long range vision. And, you know, it's based on things like true north and mission statements and values and all of those things. So it's a 3 to 5 year view. Strategy deployment takes that 3 to 5 year view and says, what do we want to accomplish this year? It's very, very specific. So strategy deployment is an annual task, and it's about what are the breakthrough improvements? Now, one of the tools, which I'm going to show you in a few minutes, is the idea of an X matrix. So that's a tool that is used to make the strategy deployment process run. Now, the planning is done in strategy deployment. We execute all the plans throughout the year. So within the context of strategy deployment, there's also this monthly review. So some companies call it sales operations and financial planning, but the idea is we're going to come together once a month. We're going to review how our improvements are progressing. Are they achieving the targets we expect? We're also going to look at operationally how we're doing in terms of meeting our demand, creating capacity, and what adjustments do we have to make possibly to the annual improvement plan. So it's sort of like a check and adjust from strategy deployment. Then you have the value stream planning, where the goals of strategy deployment come down to the value stream, and the value streams set and adjust their operational targets, like their box scores, and any specific improvement activities which may go on in the value stream. And then that even goes down to the cell planning, and that's sort of daily lean management. So, you know, aligning all this from strategy deployment all the way down to daily lean management can be accomplished. You know, what has to happen in daily lean management in terms of schedule attainment is based on meeting customer expectations, which really starts with strategy deployment. So you can see these are multiple PDA cycles, and they're done at different frequencies. Cell planning, daily. Value stream planning, that was the idea of the value stream weekly meeting. So daily, weekly, monthly, and annual. So again, lean being a time-based strategy, as opposed to planning being a one-time activity, we're constantly reviewing through all of our other PDCA processes. So strategy deployment, just setting up the plan, follows the plan, do, check, and adjust methodology. Let me explain. You know, leaders of the company set the annual objectives and the targets using measurements. The do is after the leaders of the company have set up the company plan, that gets communicated down to the value streams or the business functions or the departments to set their particular annual objectives and targets that are aligned with the company plan. What's interesting about strategy deployment is the check, and that's called the catchball process. So this is the idea of communication and collaboration, is that all of the lower parts of the organization agree on the actions that can be completed and improvement targets. And they communicate that with the leaders. And it's sort of, there's a little bit of negotiation involved. For example, a company plan may say, we expect 30% reduction in lead times. One value stream may come back and say, well, we don't think we can achieve 30% because of the level of improvement needed, but we think we can get to 20% in the next year. So the value stream would communicate that to the leaders of the company, and they would adjust the plans accordingly. And we finalize the action plans in terms of resources, time, and effort. At the company level, these are strategic initiatives. At the value stream level, it could be the specific Kaizen plan for the year. So that's the strategy deployment process. Now let's talk about this tool called the X Matrix, which some of you may be familiar with this. It's a lot like an A3. It's the idea that we take strategy deployment, the annual plan, and we get it on one document. It's summarized. Now, there's lots of derivatives of an X matrix. This is just one example. But here's what's important, and it's really what's highlighted in red. And think about this like directionally. The objectives, that's the west side of the X matrix. That's what are the few annual objectives that need to be met in the year. And this is usually 3 to 5. Okay, that's a lot different than traditional planning. Then the north side of the X matrix is how. What are the specific initiatives that need to be completed to achieve the objectives? On the east side, it's how much improvement is going to be made using measurements. So the initiatives will drive what level of improvement. You can also identify the who, where, and when. Okay, who are the people that are going to be involved, and due dates and milestones. Then the bottom, the south, here in this example, it's cost benefit. What's the financial and economic impact of achieving these objectives? Now, there are some derivatives of this. For example, the south side could be the 3 to 5 year goals. So again, this is a tool with a specific purpose. The main purpose is communication. So here's an example, and this is from a company that I worked at a few years ago, where they set, it's a software company, so you can see that a lot of the goals, were related to customer support, software that works, and engaged in valuable investment and appropriate technology for reliable service. From there, you see that there were 6 or 7 initiatives that were created. And on the right side, or the east side, the level of improvement, productivity, revenue growth, improving employee turnover, reducing lead times, improving delivery. Now the dots represent the connections, okay? And you can see that, certain initiatives impact more than one performance measure. Now, here's where lean accounting comes into play. Use the lean performance measurements. So in this case, the measurements that you see are the company lean performance measurements. We're not trying to create a separate set of measurements for strategy deployment. And when you think about the financial benefit, you can look at it from a lean accounting point of view. Okay, yeah, we're improving cash, we're improving, we're growing revenue, but we can also be creating capacity, for example. So you take the X matrix and you can cascade them down. So there's one X matrix at the company level that's completed. And then the next level down in the company, let's say it's the value stream level, they take that company X matrix and they create their own. And then the processes within the value streams will take the value stream and create their own. Now, I'm going to go back one slide here. Hold on, sorry about that. What's interesting, I don't have a graphic to show this, but this is the company X matrix. Now, if you took that matrix, if you were holding it, you turn it to the left. Okay, so if you went from the company down to a value stream, you would turn it to the left, which means the current year initiatives at the company level become the objectives at the value stream level. Then from there, the value stream has to determine their specific initiatives and their measures. And so it's that turning to the left as you cascade down in the organization that really creates this alignment. Now, we didn't talk much about lean performance measurements, but the idea of the linkage chart, which is a tool that we teach in lean accounting, there's a lot of similarities between the linkage chart and strategy deployment in the fact that when you develop a linkage chart, you start with the strategies, you create strategic measurements used at the company level, then you determine some value stream goals and value stream measurements, then you take it down to the cell level. And linkage charts very much align with strategy deployment in the fact that the linkage chart gives you the set of measures to use throughout the company for all purposes. And so when you're doing X matrices in strategy deployment, it's simply a matter of looking at the existing measures that you use and not trying to create new measurements just for strategy deployment. Also, if you have cost benefit on your X matrix, consider the economics of lean. We talk about increasing sales by increasing demand if initiatives drive that, such as trying to create a competitive advantage. You can talk about actual fixed cost reduction. And as we talk about in lean accounting performance measurements, it's really the way you measure. So again, you're not necessarily looking at an absolute reduction in sort of dollars in fixed costs. You could be looking at fixed costs as a percentage of sales, for example, as an economic impact. You can also look at reducing variable costs and improving margin. Because strategy deployment focuses a lot on continuous improvement, there's also the increasing of capacity, which can be quantified, and also improving performance, which really is in the measures, or increasing cash. So again, I encourage you, if you're using cost benefit on your X matrix, make sure that you're not just using sort of traditional financial measures, but lean focused cost benefits. So to wrap up strategy deployment, the numbers, okay, use lean performance measurements. You set targets. How much must the measure improve in 1 year? Now that can be saying lead time goes from 10 days to 5 days, or you can just use percentage improvements. And if you use percentage improvements, you want this to be something that is attainable, but somewhat of a stretch goal, okay? Because you want people to think about what problems do we have to solve? What improvements do we have to make to get our biggest return on effort? But again, you don't want it to be impossible, like we want a 75% improvement, because again, you're limited in the amount of time that you can dedicate to continuous improvement activities. Talked about focusing on the economics of lean for cost benefit. And when you get down to the box scores, when you get down to the value stream level, use your box scores. All right, so let us do attendance check number 1. So I'm going to launch the poll, and I'll just check on questions. I'll give you about 10 more seconds. All right, I'm going to close the poll. Did have one question, and this came from Eric. He says that he gets the imperative is to focus only on a few strategic objectives, and he wanted to know, are there any tests or qualifiers to get to the strategic view? I think that's really a management committee or leadership team process. Again, you try to sort of what you have a tendency to do there. Excuse me. You sort of look functionally. What does sales have to do? What does product development have to do? What does manufacture, for example, what does operations have to do? So you get sort of all these functional ideas of initiatives. I think the key is to focus from a lean viewpoint, what's best for our customers. Now, if you have a good performance measurement system in place, that sometimes it can sort of guide you along. And like I said, the other thing is limited amount of time to do improvements. And you think about this, if you can get your company to commit 20% of its time to continuous improvement, you're probably doing great in terms of a lean transformation, because you still have to run the business. But if you plan Kaizen events, a person can only be involved in one multi-day Kaizen event a month. And if you think about Kaizen events maybe being somewhat cross-functional, you can't be running many Kaizen events throughout the company, because it's going to consume time. So I think measurements and thinking about the amount of time. Good question. Okay, so the next step in strategy deployment is what's called the monthly review. Some companies call it sales operations and financial planning, or even just forecasting. Sometimes this is a a lot of companies do this. Sometimes it may be like forecasting. It might just be doing a financial forecast, and it might just be the accounting and finance people doing it and senior leaders reviewing it. So what we're trying to do, though, is incorporate this monthly review into the overall strategy deployment process. So again, plan, do, check, adjust. So we set the plan up. That was strategy deployment. You know, we're conducting improvement events throughout the business. The check is we're going to do a monthly review. We're going to look at operational information, financial information. We're going to look at the status of improvements, and we're going to really see, are we making progress towards those goals? On the X matrix, we had measures, and we had, for example, percentage of improvement. So based on the improvement events that have been completed, how close are we towards that goal? And if necessary, in this monthly review, we make the necessary adjustments to operations or improvements, the improvement plan, to try to get back on track. Now, some companies do this monthly, some companies do this quarterly, and it's, again, very cross-functional. It could be company leaders and the value stream managers, maybe, you know, also the functional administrative leaders of the company. It's more than just the financial review. It's about the actions that are driving financial outcomes. Now, again, I'll share a story from my experience as a CFO where we had the traditional management meeting. You know, what did we do? We started with the financials. We reviewed the financials, and people asked a lot of questions, and we got off on tangents. And, you know, we had other things on the agenda, and the hour-long meeting typically ran, 2 hours. What we did, sort of in the spirit of strategy deployment, is we changed the sequence of the whole meeting, where we started with a review of all improvement events and where were we in terms of achieving targets. And we had an annual target, but we also looked at it on a quarterly basis. And we spent much more time on that. And then we talked about the financial results. So again, it was just a subtle difference, but it was much, much more effective because we didn't go down the traditional financial question rabbit holes and people got off on tangents. We focused on the drivers of the financial results. And I think that's sort of an important way to think about this monthly review. So the purpose is to sort of, check and adjust the tactics, the plans that are going on in departments, processes, and value streams. Use a cross-functional approach. What do? We can update our sales forecast, update operational improvement plans, update a financial forecast. So we're trying to integrate this: sales planning, operational planning, and financial planning. So here's an example of a monthly review process. This is what's called a SIPOC chart, where it's suppliers, inputs, the process step, outputs, and customers. And you can see, it follows sort of the traditional review process where we're looking at our demand, changes to the demand forecast. We're looking at operational plans. So for example, we're looking at our box scores. And we're also looking at the status of improvements, and we're making the necessary adjustments. From there, we complete maybe a updated financial plan, a rolling forecast. And then eventually there's this executive review. Again, we're not talking about days. We're talking about that this process works very quickly. And it's just a sort of a check and adjust for strategy deployment to see how we're progressing. So again, you know, it's really, really important to remember you do the annual process, but you have to have something going on more frequently than once a year to understand whether all of these initiatives and improvement plans are making the progress that we want or not. All right, so let us do attendance check number 2. Excuse me. All right, I'm gonna close the poll. Not gonna share the results. I think there's another question, so let's see. So a couple questions which I have time to answer right now. One is, can the monthly review be combined with a monthly S&OP process? Short answer is yes, it can. I think, you know, the key there is, you know, sometimes a traditional S&OP process, you're just focused on numbers. Okay, you need to work the improvement plan into the traditional S&OP process. Another question or comment, which is really good from Brian, is, you know, what produces the most revenue customer satisfaction? When looking at strategy deployment, when looking at initiatives, that's really a good acid test. I mean, if you focus improvement efforts on serving customers better, they're probably, you know, going to be quality improvement events. All right, so that takes care of those questions. And now I'm going to move into the managing piece. I'm going to really focus on accounting's roles and responsibilities in managing the value stream. You know, for the experienced lean practitioners that put a value stream organization in place, a lot of what I'm going to be talking about is sort of common actions and responsibilities and tools and practices. So what I'm really trying to do here is you know, focus how on accounting can be involved in this, and how accounting can really sort of transform its role in the lean company from the traditional bean counting role and just crunching numbers on spreadsheets to being actively involved in the business and being able to, and having the business being able to draw on accounting's unique skills in terms of analytics. All right. So first of all, let's talk about how value streams are managed in general. There's lots of approaches, but you have to, if you identify a value stream and you have to organize around the value stream and manage it. It's not going to manage itself. And the vertical organizational structure won't manage it either, because value streams flow this way horizontally through the company. So the best thing to do, from my experience, is create a strong value stream management team. You have to have a value stream manager, and within the context of the value stream, you have some direct reports there mostly from an operational standpoint. You have to have the support functions represented on this team. Like in manufacturing, you need some quality representation, some engineering representation. These are subject matter experts. You need other functional representation like sales and marketing. And, which is the main point of this slide, you need accounting and finance representation. Okay. You attend the meetings, you support the team as needed. And it's just sort of like the same role accounting does in supporting the organization, but you want to support the value stream in that way. This value stream team has authority, accountability, and responsibility for driving improvement, both financially and operationally, in the value stream. This is sort of like the executive team of the value stream or the leadership team of the value stream. From the role of accounting, think about this. A lot of, like in manufacturing, one of the roles in accounting is like cost accountant or manager accountant. What you want to do is you want to sort of turn those roles into value stream accountant, where they have, responsibility to work with the value streams on an ongoing basis. There are alternatives to this, okay? My point here is create a strong cross-functional value stream management team. Make sure that accounting is represented and they actively participate, okay? This is not about calling on accounting when you need them. Whenever the value stream management team is meeting, accounting is there, just like all the other functions are there. So that's step one in terms of accounting's role in managing value streams. The next is something that's called manager standard work or leader standard work. And this again is a standard lean practice. Okay, and this is a management routine. And it's a little bit different than the way accounting is used to working. Okay, I was a chief financial officer, and yeah, we like our spreadsheets, we like to produce numbers and reports, and we like to work through the numbers. Manager standard work is about going and seeing, okay? See the actual work in the actual place by the actual people. This is the idea of going to the Gemba, of being in the Gemba. You're trying to learn. You're learning about process performance, you're learning about the people, you're learning about problems. And the idea is to coach. You're trying to develop people, help them solve problems better, and understand opportunities for improvement. This is important because, cause and effect. Operational practices drive financial results. So the more that accounting practices manager standard work, the more involved it is going to be in the business. So again, this is a plan, do, check, adjust cycle. You develop a cadence or routine. You conduct the Gemba walks. You use the visual controls. You use the meetings to understand problems and issues. You engage with the team to address problems and issues. Could be just operational problems. Now, here's the thing. This is a regular routine. This is a priority. You do it all the time, whatever the cadence or the routine is. It may be daily, it might be weekly, it might be attending meetings, whatever the routine is, it is a priority. You don't skip manager standard work because of other meetings. I'm working with a company right now that's trying to put this in place, and they're with the finance team, and the biggest hurdle they have is that the finance team always feels like it has competing priorities that are getting in the way of doing Gemba walks. And so it takes a lot of discipline, not just in accounting, but throughout the organization if you want to have effective manager standard work, to carve out the time. Like one healthcare facility we worked at a few years ago, they were having problems getting manager standard work in place. So what they did, excuse me, is they created a few no meeting zones in the company, meaning they blocked out certain periods of time during the day where no meetings could be called. The only meeting which could be done would be a huddle meeting or doing the manager standard work. So how does this look for accounting? On a daily basis, do Gemba walks. In operations, you can also do Gemba walks in your financial processes. Attend daily huddle meetings in operations. This is where you're going to learn a lot. You're going to learn about what's driving, what operational problems and issues could have positive or negative financial impacts if trends continue. On a weekly basis, attend the value stream team meetings. Like I said, you're part of a value stream team. Be part of the monthly review, update the financial forecasts. And here's one that I think is it really needs to become part of manager standard work for accounting, is be actively involved in improvement activities. For maybe major Kaizen events, be on a Kaizen team. You're part of the team. If not, be the subject matter expert on call in case certain types of analysis must have to be performed. And again, accounting is very skilled at this and can do a good job of performing them. So again, these are some of the ways that you can begin doing standard work. Think of it on a time basis and focus on what operations is doing and try and integrate yourself. Now, obviously, you have to make the time for this. So you have to think about maybe meetings that you are involved in that maybe you can not be involved in those meetings and attend other type Gemba walk meetings. The final piece of this is to become lean financial coaches. You know, traditional financial management, you know, the stereotypical finance person or accountant, you know, they're sort of isolated. They sit in their desks. They perform all kinds of great analytical exercises, and they draw conclusions. They tell the company, you know, here's where we are, here's what we need to do. It's sort of like top down, okay? What you want to become, you want to transform accounting and finance into being lean financial coaches, okay? So it's about developing people to solve problems using plan, do, check, adjust. It's about being in the Gemba, asking open-ended questions, developing a learning mindset, and being very humble about it. It's really, really important to understand, not just this, really everybody in a company, that you know, we don't have all the answers. We may not even understand our problems. And we may not, and we have to study our problems to develop the solutions. And this is a learning process. And so again, even from an accounting viewpoint, numbers seem to be very specific and we know what the numbers are, but we have to get into what's driving the numbers. You know, people solve problems. So the idea is to become more of a coach rather than sort of telling people what to do. So a coach, you know, you think about if you've ever played a sport and had a coach, even something like maybe learning a musical instrument. You had a teacher or a coach, or you can even think about educationally, you know, you had professors in university, you had teachers in school. So, what's the common characteristic of all of these roles is that they have experience and they have a methodology to help you learn. So we have financial experience. We know we're good at accounting and finance. We want to help people get better at it. Okay. And as I always say, what you're really trying to do here is create an army of financial and analysts throughout the company. They may not be accountants, but they're good at financial analysis. So one of the best ways to practice lean financial coaching is using these 5 questions. Now, this comes from the Toyota Kata, okay? And if you're ever engaging with anyone in the Gemba, in a team, in trying to do an analysis to come up with a decision, these are really the 5 questions that need to be followed. What's the target condition? What do we expect to happen? What's the current state? What are the problems and issues or what's the gap analysis between the target condition and the current state? And then what are we going to do? What's the next step? Okay, and then when can we see those results? So it's 5 questions. It really sort of follows the PDCA process. And it becomes very, very effective. Like this company I'm working with and helping them develop Gemba walks for their finance team. Person who's developing the program had a very long list of questions that the finance manager should ask. And I suggested just focus on these 5, okay? Because it's 5, it's easy to remember, and it's a regular routine. So, when it comes to coaching, you do it on a regular basis, not when you have time. Use the 5 coaching questions, have some structure. There's other ways to do questions, could be open-ended questions, things like that, 5 whys, versus unstructured and meandering. Do it in the Gemba, not in your office. And, you're looking for a threshold of knowledge. What can you learn? The people or person you're talking to, what can they learn? You're trying to get away from any kind of preconceived notions or solutions that you already have. So what you're trying to do with the coaching questions is try to drive improvement. So you're trying to get others to understand what's the direction or challenge that is being faced. What's the current condition? What do we have to study to understand the current state? What's the level of improvement we want? What by when? It doesn't have to be the ultimate solution. It can be a step in the right direction, but we know that's what we're trying to get as a coach. How much better can we get? And then you experiment. So again, think about playing a musical instrument or learning in school. There's a specific method to learn how to play a musical instrument or learn how to do accounting. So you have to master the basics before you go to the advanced. And that's really what you're trying to do as a financial coach. Okay, you're trying to get people to understand really the cause and effect relationships between operating performance and financial performance. And by the way, you're also trying to learn those a little bit better also. All right, so let's do attendance check number 3. and then we'll wrap things up. Alrighty, I'm going to close the poll. All right, we have a few minutes left. Before I do the wrap up, please remember, download the presentation and the assessment forms. If you want continuing education credit, please send me an email, and you'll get a survey after this. Please complete the survey. So I want to review sort of value stream management in total. You know, we started in April controlling the value stream with daily lead management practices. The plan basically is, you know, a balanced daily schedule of what we are going to accomplish today. We execute the work, and we have standard responses to problems as they arise. We troubleshoot. We use the daily huddle around the visual board and the daily measurements to understand gaps from standard. Okay, that's the check. How did we do? And the adjust is we make improvements we can make, or we escalate problems and issues to a higher level in the organization to solve the problems. So that's sort of daily lean management, which is the basic. Improving the value stream focuses on setting these improvement targets, developing implementation plans, using box scores. We have a current state box score and a future state box score. We conduct all these events. We measure the impact of every event. We have a value stream weekly meeting. We're updating the box score. We're understanding our gap from the targets. Are we making progress on improvement? How is operations doing also? And we, you know, through the idea of this weekly meeting, we're adjusting improvement activities as needed. The planning of the value stream, you know, we start with the company X matrix. We cascade the X matrices through the organization, and they each develop their own. We have this monthly review using measures and box scores, looking at, and then we adjust improvement activities, we update forecasts. And finally, you know, sort of managing and accounting, working in the Gemba. Talked about this just a few minutes ago. Think about creating a daily cycle of Gemba walks in operations, attending daily huddles. You have the weekly cycle of being part of value stream team meetings. You have the monthly cycle of the monthly review. And you also have the improvement cycle of being actively involved in continuous improvement activities. All righty, so 2 final slides. Don't forget about our capacity calculator template, which is good for both for manufacturing and non-manufacturing. Download it. Your Excel files, they have instructions on them, and if you want to learn how to use them, I will spend some time with you to do that. And we have our community chat, which is coming up on Thursday, and it schedules the second or third Thursday every month. I haven't scheduled any webinars for June, July, August, or September yet. I will probably be doing that in the next week or so. I'm trying to work out a few things on a work schedule, but watch for email announcements for those webinars and maybe some online courses. And in the survey, I've asked a question about, you know, what you would like to see in terms of like webinars or online courses, and please feel free to make any suggestions. So that wraps things up. We're at the top of the hour. Thanks for attending, and look forward to seeing you in the community chat and also in future online events.